los efectos de los aranceles, lo que se espera, cuáles son las expectativas, en este caso, del Bank of America. Saludamos ya a Atha-Nasios Vam-Vaki-Dis, Managing Director and Global Head, G10 FX Strategy, Bank of America. Hello.
Hello. Thank you for having me in your show.
Thank you for being with us today. What is Bank of America's outlook for the tariffs as they go into effect today?
We expect tariff on selected products, which we believe is broadly what markets expect, and also room for negotiation. We don't expect across-the-board tariffs, which we believe will be a negative surprise. Also, there is a question, whatever it is announced, whether it will be a cap allowing for negotiations to break it down, or whether it will lead to a negative scenario of retaliation, counter-retaliation, and escalating a full trade war. We assume this worst-case scenario is a tail risk, is not the most likely scenario. So most likely, the announcement will be a higher level than what we are going to end up with.
And Atha-Nasios, what do you expect from this U.S. unemployment rate from this Friday's U.S. unemployment rate?
Now, we are somewhat above the consensus, closer to 180. The consensus is at 130. But honestly, it's very hard to tell. There are some one-off effects from bad weather in the previous months. So the risk might be for a somewhat stronger number than expected. However, the soft data in the US has been weakening, and the market is looking for the hard data to start weakening as well. So if we get a somewhat strong number, the market is likely to dismiss it, because again, it might be driven from some one-off effects, and the market knows that it is a matter of time for the labor market to start weakening, consistent with the weakness we have seen in the soft data, to a large extent because of the substantial policy uncertainty.
Do you think the Fed's stance will change this year?
The Fed is in a very difficult position because on the one hand, the growth outlook has worsened, but inflation expectations have increased and inflation risks have increased because of tariffs. So for now, we believe the Fed will remain on hold. For the Fed to cut rates further, we need to see the labor market weakening. In this case, the Fed might ignore one-off inflation effects from tariffs and focus on supporting the economy. At this point, however, because the real economy remains resilient and inflation expectations have increased, the Fed is stuck and will remain on hold for now.
And according to Bank of America, the synchronized selling currently taking place in the Magnificent Seven has increased this correlation between the stocks, amplifying risk. Can you tell us about this?
To a large extent, it's an unwinding of extreme long positioning. The market started the year very much long the dollar, very much long US equities, particularly the Magnificent Seven. And now with this stagflationary policy mix in the US and the Fed stock being on hold and the policy uncertainty, the market is selling both US equities, and particularly the Magnificent Sevens, where positioning was the longest, and the dollar. So we have this positive correlation between the two, which was not the case historically. So to a large extent, it has to do with the policy uncertainty in the US, the fact that the policy mix has not been the ideal mix that the market was expecting. It's not only tariffs, it's not only broad policy uncertainty. The authorities in the US are talking about fiscal policy tightening, which although you can argue the US needs a lower deficit, by itself this is negative for the US economy, particularly with the way it is done. So the overall policy mix leads to this risk-off in the US that is also negative for the dollar.
Atanasios Vam-Vaki-Dis, thank you very much, Managing Director and Global Head G10 FX Strategy, Bank of America. Thank you very much for being with us today. We will be waiting this Trump's announcement. Thank you very much.
Thank you, my pleasure.